Hey everyone, my name is Brendan McKay. I'm the broker owner of McKay Mortgage Company. We're a local mortgage brokerage in the DC metro area. And recently we've been working with a ton of clients to help them refinance with the historically low interest rates that are going on right now. So a question I get asked all the time is, what do you think interest rates are going to do? And should we wait to see if they get a little bit lower? And it's always prefaced with, I know you don't have a crystal ball, but they still ask the question. And it's true I don't have a crystal ball. I certainly have educated opinions on where I think the market's going to go, but it's never to the point that I would ever advise someone solely based on my prognostication on where I think the market's going. I'm never that certain. I'm never more than 55% certain. So I think that it's likely the market is going to stay flat for a little bit or it could go up or down, but it's not really helpful information. What is how do we look at this refinance or this transaction as a risk-reward scenario? So if we're looking at refinancing and trying to decide whether we should wait and see if rates get better or not, we need to know what we're risking. So if we're looking at a refinance where we're saving $15,000 over a 10-year period, and $15,000 is a significant amount of money, but over a 10-year period, it's not like, oh, this refinance is a home run. It's not. So if that client wanted to say, I want to see if rates get a little bit better, 1/8% interest rate could be an extra $5 or $6 grand in savings for them, which, you know, based on what we're risking, is significant. It might be worth it. And if rates go up and they can't refinance it all anymore, that's okay. They didn't lose that much. Where I'll have clients that are looking at 50, 60, even $100,000 in savings over a 10-year period, and they'll ask me that question, and we'll look at it and go, who cares what rates are going to do? Are we really going to risk $100,000 in interest savings over a 10-year period to save an extra $6 or $7 grand? Like, that's a very unbalanced risk-reward scenario, and that's how you should be looking at it when you're asking that question, not what are rates going to do or what's the market going to do. We don't know the answer to that. Look at your scenario and make the smart decision for you. And also, if you would like me to run a scenario specifically for you and your specific situations, just email me a copy of your mortgage statement. I'd be more than happy to do so. Thanks for taking the time.